So welcome to the 1970s. You know, the 1970s was a pretty crazy time. We had super high inflation. We had all kinds of stuff happening. Now we're seeing issues of, wars. We got the war in the Middle East. We've got the one in Ukraine. We've got different things going on. It's causing just major issues. We've also had the fastest increase of interest rates in the last 40 years. You can see by this chart. And inflation, after all of this, after a lot of rate hikes, inflation is still going up and it's not going down, right? So what can we do about it? What can you do if you find yourself suddenly back in the 1970s without wearing a disco outfit? How can you take advantage of it as an investor? How can you protect your wealth? We're going to talk about it in 3 steps and get into a good quote at the end. Let's jump in. All right, so quick disclaimer, I'm not an investment advisor. I'm not your investment advisor, so get your own advice, make your own opinions. My name is Bronson Hill. I'm the CEO of Bronson Equity. We do properties like this. We also do ATM machines, car washes, oil and gas deals, other things. We also provide education through videos like this. So welcome to the 1970s, right? You may not feel like it, but we've stepped back to the 1970s. What was happening then? We had all kinds of issues. Inflation was close to 15% in the 1970s. But yet in 1973, inflation was only 3.7%. And then it spiked, right? So we could still actually see more spiking of inflation, which we have seen inflation come up slightly over time. There's usually a lag effect in when inflation actually takes its approach. Some people actually believe that inflation doesn't actually really show up after a major spending for about 5 to 10 years, and we're going to get into that, kind of why that happened. Energy prices were up in the 1970s. We had a 7x increase, so 700% increase in the price of oil by 1980, and this happened through the Middle East embargo, some other issues there, some global kind of dynamics were going on. And what were the causes of the 1970 issues? Well, this guy, Bruce McLaury, wrote this article talking about just the different causes of the financial issues in the 1970s. And he said 4 things. He said inflation, recession, the energy crisis, and questions of financial stability, right? So what do we have today? Inflation, recession, we're having an energy crisis, and with questions of financial stability. We are in the 1970s. So welcome, get your disco stuff on, let's go. So what happened in 1971 is that Nixon took us off the gold standard and basically just completely, and then we had this runaway debt. You can see there's just incredible runaway debt since that point. There was no accountability, there was no limit to spending. And so we've seen just an incredible amount of inflation from that. But in the 1970s, that's what was happening. There was the Vietnam War, there were different issues that were going on politically, there was a lot of programs that were out there, and so there was a lot of different things that were happening. So that was happening then, right? The 4 things: inflation, recession, the energy crisis, and questions of financial stability. Well, what's happening now in the US, right? Inflation, recession, the energy crisis, and questions of financial stability. We've seen raising interest rates 11 times since March of 2022. Inflation, as I mentioned, in September of 23, went up to 3.7%. That's the official number. Unofficially, with shadowstats.com, you'll see it's more like 7-8%. So it's probably much higher than it's being reported, but it's going in the wrong directions no matter how you measure it. And everybody knows things the prices have not come down. And that's the thing about inflation. If inflation rises, you actually have to have disinflation or negative inflation for prices to actually come down, and they don't typically, right? That's something to consider. And then, when trying, it appears the Fed is actually really trying to cause a recession. And you might be like, well, why in the world would you want to cause a recession? Well, it will bring down inflation. So they're fighting this battle against inflation. They're trying to do everything they can. Another thing we talked about, financial stability, right? Well, we're seeing incredible fiscal irresponsibility, right? The deficits are significantly rising. We're expecting around a $2 trillion a year planned shortfall. You can see this chart, $1 to $2 trillion. In 10 years, the debt right now is around $32 trillion. That's the official debt. There's all these non-balance sheet things like Medicare and Social Security and other things. It could be 100 trillion or more, even higher than it already is. But we're expected to increase the planned deficit and the planned debt by at least around 20 trillion over the next 10 years. So going from 32 trillion to 52 trillion, so incredible spending. It's expected to be that debt payments will be over 10% of GDP in 10 years, which is significant. Depending on the cost of interest rate, if interest rates are lower, obviously there's less expense there. If interest rates are higher, it gets harder for us to manage our own debt. Debt to GDP is going to continue to rise. They say it's going to reach 181% by 2053. That could be conservative. It could be actually much higher than that. And so we're just continuing to have more and more debt, more fiscal irresponsibility. Talk about energy prices. Anytime there's anything that happens in the world, we got Ukraine, we got the Middle East, we've got all these things that happen. OPEC decides they're gonna just produce less oil, and prices start to go up. And I've done some videos on this too, but there's a huge underdevelopment in the drilling, the new exploration and drilling of oil. So that's one of the businesses that we're involved with, because we believe no matter what, whether you're green or not, we're going to need a ton more oil and gas, and it's in every single product just about that we use. This has oil in it. This has everything. Just about everything we wear uses some sort of petroleum products. So it's something that no matter how green we want to be, we're going to need it. So really the most important thing of all this is, okay, we're in the 1970s. What do you do about it? Well, what should you do about it? Well, get your disco suit ready, just like this, right? Well, I'm the one on the left. I've had that suit for a long time, but you got to find your own. But no, really get yourself, not in a disco mindset, but get yourself in the ability to take advantage of what's happening. Because no matter what, if there's distress in the market, there's challenges, there's always, always, always opportunity. So it has a mindset of, I'm actually going to use this to my advantage. I'm actually going to find a way to use this. So the biggest way I found is that if you can go from paper assets, or you can go from cash, or from things that are, financial assets into real assets. Because I think what's going to happen is that people are going to have a shift where they say, this money, this currency, this, the paper that we hold or this in bank accounts is losing value. We've even seen that the last couple of years. If you, haven't lived under a rock in the U.S., if you live overseas or something and you come back, you'd be shocked. Prices have gone up about 50%, kind of across the board in the last 3 years. And if you don't agree, just go to the grocery store, go anywhere. You're seeing these prices just continue to rise. So buying real assets, buying real estate, buying precious metals, getting into cheap debt if you can find it. Sometimes it's harder to find, but you can find it. So if it's below the rate of inflation, below 7-8%, you might find there's some long-term debt that actually makes sense for you. And then really to keep your eyes open, right? So just like that siren's going off there, right? Just make sure that you have yourself attuned to know when there are opportunities that come out. So you're paying attention, right? So there are certainties in life. My friend Mark Moss says this. He says there are 3 certainties in life, right? You know what they are? Death, taxes, and inflation. Inflation is the third one. It's a certainty. If you look at the charts, they're going to continue to create more currency. So getting out of currency and into assets is going to benefit you. I want to share this quote with you. This is Ron Chernow, who wrote a lot of amazing books. If you want to check out Ron Chernow, he's got a great biography on Washington. He did the one on Alexander Hamilton that ended up becoming the Hamilton play that inspired the guy that did that. He said the great inflation of the 1970s destroyed faith in paper assets, because if you held a bond, suddenly the bond was worth much less money than it was before. So again, I think that that's where we're headed, is that people will and are starting to lose faith in paper assets, because they're just paper, right? They have value because we say they have value. And when more paper or more currency is created, people, they lose faith and trust that these things are actually real and they have value. So encourage you to have a plan. Whatever your plan is, stick to it, go for it. There's always opportunities every market, so don't get negative on it, but really go for it and plan to be successful by having a plan to get into real assets. I want to share this video with you as we talked about getting out of cash. A lot of people are not getting out of cash. Actually, 10% of the population doesn't even have a bank account. They're operating mostly in cash. And so again, this is a business we're in. You can check it out up here. It's the ATM business, why cash is not going away. So check out that video. And again, if you want to join our investment club, if you're not in the club, you're not hearing about our deals in multifamily, oil and gas, ATM machines, and car washes, check that out in the link below. Also, really excited to announce this is my new book right behind me here. Just released it on Amazon. Love it, getting some great feedback on it. It's already become an Amazon bestseller. Super excited about it. So check it out. You can learn how to fire yourself and replace your working income with passive income in 3 years or less. Thanks for taking the time to educate yourself. I look forward to seeing you on the next video.